Good day, traders. Welcome once again to this week Forex forecast from Lazarus Capital. This is Onaku Blessing speaking. So traders, as we all know, I do this every week. I share with you guys my forecast, for the pairs I usually trade for the week, for the coming week. So we all know the Btcusd Eurusd, the Euro USD, the gold, the Nasdaq, and the US oil is a pair I trade, and every week I do this forecast to help you guys to see what the market is doing and what the market intends to do in the coming days. So without wasting much of our time, let's just jump right into the charts. As usual, we'll be starting with the Bitcoin Btcusd Eurusd, and here's the chart of the Btcusd Eurusd. As we all know by now, I trade on the 4-hour time frame. I pretty much do my analysis also on the 4-hour time frame, but if things are a bit confusing, I might just jump over to the daily or the weekly time frame to see what the daily or the weekly time frame is doing. But if my 4-hour time frame is clear, I just do my analysis there right away and plot my levels where I intend to execute from. But if it's not clear, I go to the daily or the weekly time frame to see things more clearer. So we're on the 4-hour time frame for the Bitcoin. As you can see, the Bitcoin is still heading to the downside. I repeat, the Bitcoin is still heading to the downside. During the week we'll be seeing some consolidation, which I told you guys that I expect this consolidation to happen, that this Bitcoin entry is going to take some time. And like I always tell us, patience is very, very important in this business. If you cannot have patience, trading is not for you, because this market is a place where money is being taken from the impatient to the patient. I repeat, money is being taken from the impatient to the patient. If you have all the strategy in the world, you have all the skills, but you cannot be patient in this game, your strategy and your edge means nothing, because patience is a very, very big edge in this market. So the Bitcoin is still heading to the downside. How do I know? This is the daily time frame. As you can see, the market is heading down. The market has been trading to the upside. With the help of this trend line, we can see that the market has been trending to the upside for a very long time. This is since since 2023. This move started from this point, and the market have been heading up. But for around January we saw this break from this trend line, and the market not only broke this trend line, there is a key support area at this point that the market has broken out from. There's a key support area here that the market has broken out from. So we can see that this market is now heading to the downside. Is it going down? I don't think so, but we might see a reasonable movement to the downside, which as traders we can take advantage of before the big boys come into the market, because I can see that the big boys are still bullish on this market. This is the weekly time frame. This is the weekly time frame, and as you can see, whatever that is happening here is a pullback of this impulse leg. This move here, whatever that is happening here is a pullback. I think when the market gets to like this, looking at this resistance area, okay, this 58.51, if the market gets to a place like this, we might see the big boys coming back to start pushing this market to the upside. So if you are selling this market, be careful of this support area. You can see it acted as a resistance area at this point. Price got here, it came all the way down, it pushed back, it broke above it, came back down, and from here it pushed all the way to the upside. So this bearish move is a pullback of this this bullish move. This bearish move here is a pullback of this bullish move. After some time, I expect the buyers to come back and take this price from this point, all the way to the upside. If price eventually breaks below this area, if price succeeds in breaking below this support, that means there is problem, for those that are holding the Bitcoin. But as traders, we do not care when the market is going down, because whichever way, if it's going down, we can make money. If it's going up, we can make money. So whichever direction is going, as traders, we don't care. So in the coming days, I still expect the Bitcoin to drop down to this area. This is the weekly time frame, as you can see this level here. And guys, that's one thing I also emphasize to you guys. Whenever you are looking at a level, and this level, you see any level that is visible to the weekly time frame and the daily time frame traders, you must understand that level is very, very important for the big players. And wherever the big players are, that is where we want to be. We want to be where the big boys are. It is as simple as that. So as you can see, the Bitcoin was trending upward, and it broke this trend line that have been supporting it going up, and it has broken below this support area. So we'll still see some significant movement down to the downside that we can take advantage of while waiting for the price to come to this support area at 48,307, where I think the big boys might be coming back in. Yeah, so this is the weekly time frame. Let's go back to the daily time frame. This is the daily time frame. We can see that this is the trend line we saw on the weekly time frame, and this is that level on the weekly time frame, also visible on the daily time frame. Now let's move over to the 4-hour time frame. So I'm taking you guys through this top-down analysis because I know some of you will be wondering, you are not even doing top-down analysis. Just go to the 4-hour time frame, my job. Yeah, relax. Everything you want to, we'll give it to you. On this channel, we want to make things very simple, guys. You need to understand that trading itself is very difficult. As much as you can simplify this game, it's better for you. I must be honest with you. As much as you can simplify it. That's why I see me bringing all these terminologies to make it very easy for you to understand, to make it easy for you. I can bring in the fair value gaps, the order block, all those things, all those grammars and all those stories, but it might just end up making things complicated for you. So that's why I make it very simple. So what we do here is very simple. Once we've identified the direction of the market, is it bullish or bearish? If it's bearish, we want to wait for the market to pull back to a resistance area that is clear to the big boys. In a bearish market, we want to see the market pull back to a resistance area that is clear to the big boys. Once we get price come to this area, from there we execute. And also, I want to ensure that this resistance area is in line with my Fibonacci. If this area lines up with my Fibonacci 5061.8, another good confluence for me. I will wait. Once price comes to that area, I execute. Simple as that. So we don't complicate things here. Same thing if the market is bullish. I want to see a pullback to a support area that is visible to the big boys, the daily and the forward and the weekly time frame. Once price pull back to this area, to this support area, I want to see if it lines up with my Fibonacci. If it does, I wait for my entry and I execute. As simple as that. That's what we do here. If the market is ranging, we want to buy at support, sell at demand, or buy at support, sell at resistance, or buy at demand, sell at supply. Very simple. We don't complicate things here. So let's quickly just wrap up this Bitcoin analysis. The analysis still remains the same, like what I've been sharing with you guys in the past weeks. I just want to just take my time to just do this top-down analysis for us, so that we can see that it's not as if we don't do those top-down analysis here, but we just want to make things very simple. So the analysis for the Bitcoin still remains the same. Let me remove this trend line. let me go to the weekly time frame now. So for the Bitcoin, and there's this other thing that I usually do. I want to look at, first of all, where did this price drop from? For a bearish move now, I want to see the previous the major lower high. For a bearish move, I want to see the major lower high where the market dropped from. You can call it a supply area. Once I can identify that area, I want to map out that area, and I'll be like, okay, for this bearish move now, this is the area where this market dropped from. This is the main lower high. So I'll be like, okay, as long as this supply area is still holding, I am bearish. As long as this supply, so me going into the week now, I'll be like, as long as this supply area holds, I am bearish, because I might be expecting to execute the market from this area, and the market might not get to this area. It might decide to push back upward. But as long as this supply area did not break, I am bearish. So that keeps me in a level where it keeps me in a state where I don't come to the market and I start being emotion, being in a state of fear when the market starts making some crazy move, because I'll be like, as long as this level is still holding, I am bearish. So it's either you come here and give me entry. If you decide to do some manipulation a bit above, I still wait for my entry. Once you give me, I execute. So this is that area. Move over to the 4-hour time frame. We can see that area is clear at this point from the weekly time frame. The area is clear at this point. Then on the 4-hour time frame, this is that area. I say, okay, as long as this area is still holding, I'm still bearish. As long as this area is still holding, I'm still bearish. So, and I look at this area and I see that this area is an area that is visible to the weekly, to the big boys. This area is visible to the big boys. You can see on the daily time frame, this is this area. Even on the weekly time frame, we can see this area too on the weekly time frame. Let me go to the line charts. So this area, this is the weekly time frame. So for me to sell the Bitcoin, if the price did not rise to this area at 78,394, I'm not interested. Guys, you always hear me saying this. I've seen this area. Look at this area. This is the weekly time frame. Look at this area on the weekly time frame. This is where I want to sell the Bitcoin for, because I know that is where the big boys are, and it's only where the big boys are. That is where I want to be. That is where I want to be. So if the Bitcoin did not rise to this area at 78,394, I'm not interested. Can the price continue to push down? Yes. We saw what happened with the crude oil in the past few days. The price refused to pull back and it kept going up. I'm not interested. If the Bitcoin did not go to this level at 78,394, Tochuku, I am not interested. At Lazarus Capital, we are not interested. If it wants to go down, let it continue to go. We'll only partake in this transaction if the Bitcoin rises to this level. It's as serious as that. And until you begin to make this type of decisions, that is the only thing that can save you in this market. You look at the market and you'll be like, if you don't come to this level, I'm not interested. And when you come to the chart, you sit on your hands and you're just looking at the chart. You do nothing. You do nothing. If the price is not at your level, you do nothing. So, let's move back to the 4-hour time frame. So this is that level where we are waiting for the Bitcoin to rise to 78, around 78 plus. And I know as long as this level holds, I am still bearish. I might even bring it down a bit to this other supply area here. As long as this level holds here, let me take the Fibonacci from this one also. Voila, can see my 61.8 at this area from here. Okay, 50, 61.8 still line up from here to here. If I decide to take from this area, still my golden zone from here, my Fibonacci from here to here, my 50, 61.8 is here. If I take this supply area, my Fibonacci 61.8 is here. Perfect. So now, this is my supply area, and I be like, as long as this supply area is holding, I am bearish. So what I'm waiting for is the Bitcoin to rise to this area. From here, I will sell this market. Once the Bitcoin rises to this area, I'll wait for the sellers to come back in, then I'll go short. Can it continue to go higher? Yes, but as long as this level holds, whether it gets here, it gives me an entry, I go short. As long as price did not close above this level, I am bearish. So I expect it to come to this area, because I can see that the big boys, anything between this place and inside this zone, even if it comes out here, if I still get my entry from here, as long as it's not here, I will execute to the downside. You understand? So for the Bitcoin, I'll be waiting for price to rise to 78, around 78,880. It might stretch upward inside this zone to give an entry. But as long as this supply area is holding, I'm still bearish on the BTC USD. Having said that, guy, there's something I spotted on the Bitcoin, a buy setup that we can still take advantage of, because this movement to the upside might not happen this coming week. We might see, by this coming week, this week we are entering, we might see the price rising to the upside, and this movement to the upside, we can take advantage of it. Why? Because I can see a zone that the market have been in a range for long. See this range here. The market has been in a range for long. The market has been ranging in this area, and just this week that just ended, we saw the market broken out from this range. I am expecting that this market will take the accumulation of this range to move to the upside, and I want to take advantage of that move. We can see the accumulation of this range from here to here. Look at it here. And the reason why I want to take this, I will be interested in this bullish move, because there are two strategies I use in entering the market. One is the trend pullback, and the other one is the mean reversion. For my trend pullback, I use the 200 EMA as my confirmation, direction. I want to trade in line with the 200 EMA, and I can see that price have broken out from this 200 EMA to the upside, even though the movement is not, it's not a major move. It's just a temporary move to this resistance area at 78,000 plus. So because price have broken above my 200 EMA, I want to take advantage of this buy move while waiting for the sell move. Ordinarily, if I'm waiting for a trend pullback, I do not take the counter trend. If I'm waiting for a trend pullback, I do not take the counter trend. But because I have price closing above my 200 EMA, and I have price breaking out of this range, this consolidation that it has been for long, that is why I want to take advantage of this buy move. So if you are interested in this buy move, when you see an entry around this area, you can go long. Exit, you can use 2 TP. Maybe you take out one for here in order to be conservative. Take out one at this area, then the other one here. But I will just be using 1 TP, all the way to this upside here. So for the BTC USD, I'm seeing a buy move that might take place at this area. I'm seeing a buy move that might take place at this area by next week. I'll buy the Bitcoin back to this resistance area. Then from there, when I get my sell entry, I will sell. If I take my Fibonacci from this level to this level, I can see that this support area is a good one. This support area is a good one. This support area is a good one. Oh, I can see acted as a resistance here, came back, pull back, acted as a support here, acted as a resistance. So I'm expecting it to hold as a support area from here. The buyers will come back in. So when the buyers come back in at this point, I will join them. I will take this buy move because it is in line with my edge. I will take this buy move, exit at this supply, exit at this resistance area, where I'll wait for the sellers to come in so I can join them, to take this market to the downside. Our major entry for Bitcoin that I've been sharing with you guys for long now is the sell entry. But I want to take advantage of this bullish move in the coming week because it falls in line with my edge, with my trade process. So for the sell, for the buy entry, for the buys entry will be at 68,525. Stop loss can be below here, 55,839. You can take your TP1 at this point, 73,255. TP2 here, 78,744. From there, I'll be waiting for the sell signal, which is our main entry. When you get your entry around this place, entry around here, 78,802. Stop loss can be here, 83,473. TP1 will come down at this level, 63,328. Then TP2 will be at the weekly time frame level I showed us, 48,307. 48,307 will be, if you want, you can use 50,000 so that you just have a round number. They say the market respects round number, so you can use 50,352 for your TP2. So that is it for the Bitcoin. Let's move over to the Euro USD, which is the next pair. Sorry guys, I know this is taking long. I will try to be fast, on the other pairs. So for the Euro USD, I told us last week that this market, I expect this market to buy from this level, from this support area. But because we can see that the whole of this week has been filled with chaos, and the market decided to take advantage of that chaos and do its thing. I remember I told us that as long as this demand area is holding, I am bullish. And that is what I was trying to explain with you guys with the Bitcoin analysis, that sometimes because you are expecting the market to come to a level, does not mean the market will respect that level. So that is why you shouldn't be in a hurry to go into the market. Patience is key. There are two things. One is location, the other one is timing. When market comes to your location, it's not a guarantee that you just jump in because you feel the market is at your location and you should start buying from there. And that is why I'm not too okay with people who use pending orders. Because when you use pending order, what it just means is that you are very certain that when the market gets to this level, it will start buying. And there's nothing is certain in the market. There's no strategy that is that does not fail. There's no strategy that does not fail. Nothing is uncertain. We don't have control of the market. So once you have analyzed, the market, and you have plotted your area where you are expecting the price to come to, you must wait for confirmation. You must wait for confirmation, because for the fact that you spotted a good support area does not mean the market will come to that support area and start buying from there. The market might get to the support area and decide to push down lower. So you must wait for your entry confirmation before you go long. So I told us that I'm expecting the Euro USD to come to this level, this demand area we see here, for us to buy. You can see it came to that demand area. It did as if it wants to go up, because this week already has been chaotic because of the tension in the Middle East and the rest. The market took advantage of that chaos and bleed all the way to the downside, bleed all the way. it came in and printed this bullish candle, and some traders will be like, oh wow, cool, this is a demand area. And that's why I told you patience is very, very important. This is a demand area. It was a resistance. It acted as a supply here, demand here. From here market will go, the market print some bullish candle, and some traders came in and it bleeded them all the way to the downside. So but I told you guys that as long as this level is still holding, I am still bullish. That is why once I have analyzed the market, I want to see that level where the move started from. You can see this is where this move started from. Even though I took my Fibonacci, I told us earlier I was expecting this market to buy from this area. I was expecting this market to buy from this area. But if the price come here, you have to be careful, because I'm seeing a demand area here. The price came here, it did as if it wants to buy from there, bleeded up to the downside. I told us I'm expecting this demand area, for the buyers to come in, because I saw another block on the daily time frame. The market came here because of the chaos of the week, it bleeded down. So, but I know. So while all that was happening, I was still, I was still neutral in my emotion. My emotion was still intact. I was like, do your thing. As long as this demand area is holding, I am still bullish. I will only be bearish on this Euro USD if I see something like this, a significant move to the downside. Then I'll wait for pullback. Then I enter after the pullback. Hold on. I'll only take a sell trade if I see a significant move to the downside. Not this type of move is doing here at this level. No, a significant move to the downside. I wait for pullback, then I enter when the sellers come back in at this point. But anything aside that, I'm not moved by all this thing that is doing, because I'm not a breakout trader, I'm a trend pullback trader. So if a price is coming to a level and it wants to, and if market is coming to a level, I must see a complete change of character before I execute. Meaning that if it's coming to a support area, a demand area, if I must sell, I must see a significant break down. Market will move down, then I wait for the pullback. Then it's at the pullback I enter when the sellers come back in. But all this thing that is doing, it doesn't make sense to me. It doesn't move me. It doesn't move me. Yeah, so I say that as long as this level holds, this demand area holds, I am bullish. And that is why I told us the market is a war of price. This is a war of price. This is war. This is war, guys. And there's something they call line of departure in the military terms. Line of departure. I look at this area also as the line of departure. I say, okay, this is where they attack. This is where the buyers launch the attack. I say, for me to be bearish, the sellers must be able to close below this level. Because when you see those line of attack in the battlefield, when the battlefield, when the other forces have been able to push forward from a certain location, when they are able to push the enemies backward into their territory, they create another line at the front where they hold. Then from that place where they push the enemies, there will be another base there where you can have some of the generals and the elite teams, and there will be another base at the front, another stronghold at the front, and the generals will be at the back and will tell the boys that ensure you hold that position. But sometimes that position might be breached, and the enemies will start to push them back, and they will all fall back to that line of departure. At that line of departure, that is where they rather die, or they push back the enemy. So I consider this area as that line of departure. Once I see this area, I say, cool. As long as this level holds, the buyers are still in control. So we can see what is happening for the Euro USD. The level is still holding. So I am still bullish on the Euro USD. So in the coming week, I'll be expecting to see, if I see the buyers push back up to this resistance area, I want to see the sellers come down. Don't forget this support area that has been broken will act as a resistance. So when the buyers push back up, I want to see the sellers come back down. Then if they come back, I want to see how strong they are. If they become weak and my buyers come back in, that is when I want to execute with my buyers here. Stop loss, below here. TP1 will come before this 200 EMA, and TP2 will be here. So for the Euro USD in the coming week, I'm still bullish as long as this my demand area is holding. Once the market open, I want to see the buyers push the market to this resistance area, and I want to see the sellers push back this market to the downside. And when they push back, I want to see how far they can go, because normal they are supposed to do what they did here to take this movement down, to take this price move down, just like what they did here, to take this price move down. But if they cannot be able to take this price move down, if they reach here and they stop and I see the buyers come back in, I will join the buyers at this point. Stop loss below here, TP1 here, TP2 here. Can the sellers push this market down to this, below this place and down? Yes, they can. If the sellers push below this level, a significant move like this, I'm not interested. I will just know that my buyers have changed to the downside, and I'll be waiting for a pullback to this level. Then I'll wait for the sellers to come back in and I execute. So but for now, I'm still bullish on the Euro USD. I'll wait for the sellers to push back. When the buyers come back to this ups, I want to see the sellers push back down here. And when they are weak and they can't go forward and the buyers come in, I will join the buyers from here. TP1 will be here before this 200 EMA, and TP2 will be here. So for the Euro USD, I'm still bullish. TP1, I will still bullish. Entry will be at this area, let's just say at 1.6164, anywhere around there. Stop loss below this demand area at 1.153635. TP1 at this point 1.17982, and TP2 will be at this point at 1.20780. So guys, let's move to the gold. The next pair is the gold. So for the gold, we can see that the gold is still bullish. Let me take us to the daily time frame. The gold is still bullish. We can see the gold is still bullish, even though we saw this bearish candle came in 4 or 5 days ago, which is what we will be expecting for the sellers to try to push the market downward. I told us that as long as this demand area is still holding, I call it the line of departure. As long as this demand area is still holding, I am still bullish for the gold. Whatever that happens here, whatever that happens in between here, doesn't move me. As long as this demand area is still holding, I am still bullish for the gold. So I'm waiting for the price to pull back to an area that a support area where I think the buyers will coming from. And as I'm looking at the market, I'm seeing a good support area at this point. You can see I'm seeing a good support area at this point. I'll just take it as a zone from here to here. I'm seeing a good support area at this point. So I'll be waiting for the gold to pull back to this area. When it goes pull back to this area, if I get a bullish signal, I will execute. I repeat, as long as this demand area is still holding, the gold is still bullish. I will only change my bias to the downside on the gold if I see price close below this area. Then I wait for a pullback. Then I join when the sellers wants to continue again. This is the only scenario whereby I will sell the gold. Whatever that is happening up here, I am not interested. I want to trade in line with the big boys, and the big boys are still bullish. The big boys are still bullish. So until I see the gold closing below this level, a significant move to the downside, I wait for a pullback, then I can change my bias. But for now, I am still bullish on the gold until this demand area, which is my line of departure, is being breached. If it is not breached, whatever that happens in this area, I'm still bullish. As long as price is trading above this demand area at 44.04, I am still bullish on the gold. So I'll be waiting for a price to pull back to an area that I think is visible. I think this area here, you can see this area here, this area is visible to the big boys. It's a good support area. If I see price pull back to this area, then I will execute. Let us take the Fibonacci of this move to confirm it. Okay, you can see, cool, this is a good 50.61.8. I just want to extend it with this zone here. I can even close it down to this week, and I'll be like, as long as this level is still holding, I'm bullish. Anywhere in between this area from year to year, I get my bullish confirmation, I'll go long on the gold. Let's move over to the 4-hour time frame. We can see on the 4-hour time frame that area is a good area. We can see this area right here. You can see this area right here. Resistance here, support here, came back, pull back up, acted as a good support here. So I'm waiting for price to come back down. And guys, that is one thing again. This is one thing that I have to explain to you guys. When you are waiting for the pullback to occur, when you see a sharp move like this, don't be in a hurry to start buying. Guys, don't be in a hurry. I've explained this to you guys, that trading is a game of war. In a war, when the enemies, when this how do I say this? Okay, in the war zone now, when there is a push, when this group pushes the other group backward, the other group will try to push back. When the other group tries to push back, the group that have an upper hand, when that other group tries to push back, the group that have an upper hand will come in with force and push them backward again. So for the gold now, the side that has an upper hand in this battle are the bulls. The side that has an upper hand in this battle are the bulls. When these bulls have made this movement to the upside, they've pushed the sellers back into their territory, and the sellers come in. Don't join these first buyers here. Let them come in. When they come in, allow the sellers to push them back in. Don't join the early buyers. You have to wait. Because as you can see, from this point now, the sellers are in charge. From this point, the buyers are in charge. From this point, the sellers are in charge. Now the sellers pushing strongly, the buyers come in, the sellers will still push them back down. And that is where we'll start saying there's manipulation. The market have manipulated the people trying to buy this market below here. That is just what is happening. So when you can see that the sellers coming strongly, be rest assured that if the buyers come in, the sellers will still come back down in. So I can see this level as a good level to buy the gold from. So I'll be waiting for the price to drop down to this level. You can see a very beautiful level, acted as a resistance here, as a support here, came back down, back in, support, expecting to come back here and act as a support. Can the gold continue to push upward? Absolutely, it can. But if the gold continue to push up from here, I'm not interested. This is where I want to buy the gold from, at 48.95. I want to buy the gold at this level at 48.95. I'll be waiting for the market to push back down, stop out all the people trying to buy this early buyers here. And when the market wants to start moving up from here, I will join. Stop loss can be below this, can be at this level. My stop loss can be here, 47.76. Entry here, 40. I'm seeing 48.96. TP1 can come here, 52.37. Then TP2 55.52. So for the gold, we are still bullish. I'll be waiting for the price to drop back down to this support area at 48.92. Stop loss will be below here at 47.74. TP1 here at 52.34, and TP2 here at 55.71. So let's move over to the next pair, which is the Nasdaq. So guys, I know this video is taking time, but please, I just want to take my time to explain the things that is happening in the market. So when you open the chart, the first thing you want to see is the market ranging or is the market trending? You can see all the other peers we've been analyzing, even though we are seeing some form of consolidation, some form of build up. Overall, the market is trending. The Bitcoin is trending to the downside. The Euro USD is still bullish. The gold is still bullish. But for the Nasdaq, the market has been ranging. And there are two things, I want to look at. Two things I just spot immediately that, makes me to know that the market is ranging. On my 4-hour time frame where I do my execution, once I see the 200 EMA moving in between my price is breaking above the 200 EMA and breaking below it, I know that the market is ranging on my 4-hour time frame. I must understand that I pay attention to the 4-hour time frame, because what I've realized in this market is, if you can pay attention, if you can pay attention to a time frame, if you can just pay attention to a time frame, you stay with a time frame long enough, you understand how the market moves as per that time frame. If you can pay attention to a time frame long enough, you understand how the market moves as per that time frame. This will save you a lot of it. You become a master of that time frame. That is how mastery is being built. If you can look at a time frame, even if it is the 1 second time frame, if you can stay with that time frame long enough, at a point you understand how all the market players are operating as per that time frame. So for the 4-hour time frame, that's one of the reasons I have my 200 EMA here. Once I see that my 200 EMA is moving in between price, and I see that there's supply, there's demand, there's supply, there's demand, I know that on my 4-hour time frame the price is ranging. The market is ranging. And when the market is ranging, what do? I sell at supply, I buy at demand. When the market is ranging, what do? I sell at supply, I buy at demand. Until this price, until this market close above, that's when I will say this market has become bullish. Then I will just wait for a pullback to support. Then I'll go long when the market is about going up, or the market closes below. Then I'll say that, okay, this market is bearish. Then I wait for pullback to resistance. Then I wait for my sellers to come back in. Then I join them. Let's put this here. Take this here. Yeah, cool. Okay. Until the market breaks above, I wait some pullback. The buyers come back in, I join them. That is when I say this market is officially bullish. Or it breaks below, I wait for a pullback to the to resistance. I wait for the sellers to come back, I join them. That is when I say this market is officially bearish. Aside this, there are equal buyers in the market, there are equal sellers. What I do is I wait for the price to come to supply. I wait for the price to come to supply. I sell. I wait for it to come to demand, or I buy. The market is ranging. Once I see on my 4-hour time frame that my 200 EMA is moving between price, and I see price closing above the 200 EMA, closing below it, closing above it, closing below it, closing above it, closing below it, closing above it, closing, I know that this market, I'm officially in a range. And one other thing I told you guys about the range is, once the market have left a supply area, it's coming to the demand area. Once it has left the demand area, it's going, you see how long it took to range here, but eventually came to this supply area. Once it has left the supply area, it's coming back to this demand area. Now, once this market have left the supply area, even if I want to join this sell entry, it has left this supply area. Once this market have left this supply area, I am not going, even if I want to join this market here now, I cannot buy. I am not going to buy. Nothing will make me to buy. As this market has left this supply area, nothing will make me to buy this market, because I know it's coming to this demand. Until I see the price come back to this demand area. If the price comes to this demand area and start to go up, whatever that happens, I will not sell. It's only buy I'll be looking for, because it has come to this demand that is now going up. Because, and see what happens in the week. Look at people who are trying to buy this market. Look at what is happening to them. They try to buy, market came back down. They try to buy, came back down. Try to buy, came back down. Chaos. And that is why I told you guys that one of the things that will save you in this market is your decision, your behavior, and your risk management. Your decision, your behavior, your risk management. These are the things that will save you. So once I've made the decision that, dude, as long as you've not got into the demand area, I'm not buying, I'm only looking for sell. I don't have business with you. That is my decision. Once I open the chart, I ensure that I control my emotions and my behavior, and when I get an entry, I use a reasonable risk size that will not affect my stability. Now, how do I intend to trade the Nasdaq in the coming days? I've seen that the market is ranging. Inside this range, the market is still in another range. This is that range here again. Inside the range, the market is still in another range. There is another range here again. Show you guys something. There's another range again here. There's another range here again. Crazy markets. This past few weeks, if you are able to stay away from this market, guy, you are doing well. If in the past 2 weeks, if you be able to sit as a 4-hour time frame trader, you'll be able to sit on your hands without doing nothing, you are a great trader. It's not about whether you made money or not. If you're a 4-hour time frame trader and you've been able to sit on your hands in this past couple of weeks, you are a great trader. I kid you not. So now the market is ranging here. It got to this supply area, came down to this demand, went back up, eventually got to this supply. It's coming back to this demand, but instead of it to come straight to this demand, just look at what it's now doing. Crazy. Do you know what this have cost people? This thing, as I'm seeing this chaos here, I'm seeing sleepless nights. I'm seeing blown accounts. I'm seeing blown. Guys, you don't understand. If this market have dealt with you, you understand what I'm saying. You will understand what I am saying. I'm seeing chaos here. I'm seeing blown account. I'm seeing money lost. I'm seeing sleepless night. I'm seeing headache. I'm seeing frustration inside this place. There's a range here and another range here. What am I waiting for? Remember, one of the rules of a ranging market is wait for the price to come to the supply area, you sell, or wait for it to come to the demand area, you sell. Anything happening here, consider it as a no man's land. Normally, I won't be buying this market because I know the market have not gotten to this demand area. if this market have gotten to this demand area, I won't be selling. The only thing I'll be waiting for is buying, because I know this market is coming to this demand area. That is why I won't be buying this market, because you can buy this market and the market will just bleed all the way to the downside. I'm expecting this market to come to this resistance area, so that from there, if I get a sell entry, I will sell. Can it continue down? Yes. It's not compulsory it will come up, and that's what I keep telling you guys. For the fact that you draw a trade plan does not mean the market will come to that trade plan. Your duty is to wait. Consider yourself as a trapper who went to the bush to trap, like an antelope or something. When you set the trap, you cannot force the antelope or the grass cutter inside the trap. You set the trap and you wait. If the grass cutter or the antelope enters the trap, fine. If it doesn't enter the traps, you continue to wait. So for the fact that you do out your analysis and your trade plan that okay, this market will come up here so that I will sell, does not mean the market will come there. The market can decide to continue its bearish move and break below and continue. You should be okay with that. As a disciplined trader, you should be okay with the market not coming to your plan. Once you've done your trade plan, you know your edge, you know your process, you wait for it, you follow it. Do you understand me? So for the Nasdaq, for the US 100, I'll be waiting for the market to rise back to this resistance area. Then from this resistance area, when the sellers come back, I want to join them there. And guys, there's another thing again I see. You can see what happened here. There was a first attempt here, second attempt, third attempt. Usually at the third attempt, the market usually moves significantly. If at this third attempt, these buyers cannot push above this level, then I know they are not serious. I'm waiting for them to come there. Now look at the sellers. This is a first attempt, this is a second attempt. I'm expecting to see what they will do at the third attempt, so I'm counting on them to make. You can see at the first attempt they made a significant move. The buyers came in, look at their shopping move. The second attempt they made a significant move. The buyers came in, they tried to pretend as if they were strong here, but they were just flattering to deceive. Now I'm waiting for the third attempt of the sellers at this resistance. If the sellers come back in at this point, 1, 2, 3, at this point, I'm expecting them to push down to this area. So for the Nasdaq, I'll be waiting for price to rise to this resistance area at 25,379, between 25,379 and this area. Anywhere around this area, I get my sell signal, I will sell the Nasdaq. TP1 can be here, while TP2 will be at this demand area. So Nasdaq entry at this point 25,375, stop loss here 25,572. TP1 can come down here. TP1 can come down here. This area I think is a good one. TP1 can come down here 24,808. Then TP2 at this demand area 23,824. So let's move over to the crazy guy for the week, the US oil. Whoa. The crazy guy for the week, man. The guy is on steroid, man. The US oil is on steroid. The guy is on something else. The guy is on something else. So, as you can see, the US oil fuel, because of the tension in the Middle East, the war between the US, the Israel versus the Iran, it has pushed the price of oil to the upside, because the Strait of Hormuz have been shut and the tensions everywhere, so the price of oil is just skyrocketed. And guys, here's the thing: without this war, the oil will still go up, but this oil, they are just fasting it. The technicals don't lie, man. I already knew the oil was going to go up, but the market just blew a movement that maybe I would have taken like 3 months, in a couple of weeks, have just happened. So and guys, there's another thing again I want to tell you guys. There's this mindset you need to have when you see a move like this in the market. Stop saying, oh, I missed it, oh, I missed it, I wish I entered this market from here, look at all the money that I would have made, I would have bought my Lamborghini, I would have gone to a vacation, I would have. Guy, relax, calm down, calm down, calm down. When you see a move like this, you've not missed it. Stop having that mindset of, oh, I've missed it, I've missed it. No, when you continue to have those type of mindsets, you cannot survive this game, because before you know it, you continue to look for how to chase the markets. When you see a move happen like this, you must be like, oh, great, good, good, now you have shown us where you are heading to. Imagine how when the market was going up, going down, going up, going down. This is nonsense. This is nonsense. We don't even know whether it wants to go up or it wants to go down. But now it has shown us that, okay, the market is bullish, and as a trend pullback trader, these are the kind of things you see in the market, and you are okay, because you know it makes you to understand that the direction is clear. I'm just waiting for a pullback to it. So now what I look for is a good support area. Once I can see the market coming down to a good support area, I can execute. Peace of mind, clear and clean analysis, not the one I'm not sure that is going up or is good. Now it's clear that the market direction is to the upside. So when you see something like this happen in the market, no matter the peer, no matter the instruments, remove that mentality of I've missed it, I've missed it. No, the market have shown you this is where I'm heading to. Now you wait for it to pull back, you wait for discount, you wait for deal. So as usual, this is my line of departure. I can see this is the weekly time frame. I can see this is my line of departure. This is where the move started from. I can see it's a good, this is a support area in the past, support area, can extend it here also if you want. Support area, support, so this is my line of departure. So going into the week, I say, okay, as long as this demand area is holding at 69.184, as long as this demand area, maybe we'll just keep it at $70. 70, let's keep it at 70. So I say, as long as this market is sold, okay, 70, I can see this area here, this support area here is a good one, okay, 70. So I say, as long as the market, as long as the oil is trading above $70 per barrel, I am bullish. So that puts me in a very comfortable position. I know what I'm looking for, I know what I'm waiting for. Whatever that happens in the market, I'm not interested. The market is bullish. Now where do I want the market to pull back to? I can see a good support area at this point. This has been a resistance area that I've been holding this market in the past. Like I told you guys, any area that is visible to the big boys on the weekly and the daily time frame, these are areas that I'm interested in. You can see that this acted as a resistance, as a support here. Resistance, support, resistance, 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 resistance. Okay, cool. Now in the coming week, I'll be waiting for this market, for the crude oil to pull back to this area. If I take my Fibonacci from this leg to this leg, I can see that this area lined up with my Fibonacci 61.8. And guys, I told you, the first thing I do is to look for a bullish market. I look for a good support area that is obvious to the big boys. Once I get this support area, I want to see if this area lined up with Fibonacci 5061.8. Guys, there's something about the Fibonacci 5061.8 which I will explain to you guys in another video. It will be an offshot video. I'm going to tell you guys how important, what makes the Fibonacci 5061.8 very powerful. I'm going to do that video with you guys. Okay, so the first thing I want to see is the market bullish. Yes, once I confirm that the market is bullish, now I want to see a level that is obvious to the big boys. I want to see a level that is obvious to the big boys, a level that has acted as a support in the past, or that has acted as a resistance in the past. So I want to take that, I want the price to come down to that area. That is why I'm expecting that the big boys will come back in, and when they come back in, I will join them. And once I spot that level, I want to see if that level lined up with my Fibonacci 5061.8. If the level lines up with my Fibonacci 5061.8, then I wait for the level to pull. I wait for the price to pull back to that level. I wait for my bullish entry confirmation. I take my trade. That is how simple my strategy is. For the sell entry, I want to see, is the market bearish? If the market is bearish, or if the market is bearish, fine, cool. Then I want to see a resistance area that is visible to the big boys. Once I spot that resistance area, I want to see if that area lined up with Fibonacci 5061.8. If it does, cool. I want the market to pull to that area and wait for my bearish entry confirmation, then I go short. As simple as that, guys. This market is a dangerous place. Trading is the most difficult way to make easy money. It is very difficult. Don't allow them to deceive you. You see all those guys, on the beach, forget all those things, guys. I won't lie to you. Forget all those things. So you must find a way to simplify this thing. Find a way to control, have a framework. You must have a framework. You must have a structure that can protect your emotions. You must have an edge. Have a process, have a structure that can protect your emotion, that can protect your mindset. Find a way to simplify it in the best way you can execute. So, I'll wait for it to pull back to this area. Let me go to the 4-hour time frame direct. Let's see the daily time frame. We can see on the daily time frame, this is that level visible to the daily time frame too. 4-hour time frame, okay, this is that level visible to the 4-hour time frame. Let's expand it. Okay, we can see this area. Okay, cool. This was a structural broken. It was acting as a resistance here. Try to push the price downward, and price broke all the way to the upside. In the coming days, I'll be expecting the market to push back to that area. So this is my line of departure, demand area. It was after the weekend on a Friday. We saw this gap up, and we saw this leg, impulse leg. Since then, the market have been on steroid, flying like a rocket ship into the skies. So what I've been waiting for in the coming days is for the market to pull back to this area. Waiting for the pullback. Let me just zoom in. I'm interested only in the 4-hour time frame. I want to simplify things. I don't want things to confuse me. I don't need confusion, guys. You must understand that this market, guys, this market is a dangerous place. This market is dangerous. This market is dangerous. This market is dangerous. You have to be careful so that this market don't send you. It doesn't send you to the village, man. This market is capable of sending someone to the village. So you must help yourself. I can take all this zone. I can take all this zone from this week here down to this area. Let me see this leg, this Fibonacci leg from here to here. Cool. So I can see my 5061.8 is here, but I can extend it all the way down to this zone here. So I'll be waiting for this market at this point. I'll be waiting for the oil at this point. So I'll be waiting for the oil to pull back to this area. When it pulls back, I want to see buyers come in, and I join them. Stop loss will be here. TP1 will be here. And guys, some people will be like, with the war that is going on, how are you sure this oil is going to pull back? This oil will just continue. Guys, if it wants to continue, let it go. If it wants to continue, let it go. Not interested. There are other pairs to trade. That is why, as a 4-hour time frame trader, you shouldn't focus on one pair. You must have like 1 or 2, 3, 4 pairs, so that when the other one is not giving you entry, one might give you entry. You can see for like 2 weeks now, I'm not taking any entry, but this week we are entering. I'm expecting an entry this week, and it might not come. It might not come. And that is why, as a trader, you must have other things that you are doing. You don't, because when you start to focus that you want to make money on trading, you become, you become emotional and you want to start looking for entry where there's no entry. But you have other source of other source of income, other things that is paying your bills. You can trade with a calm mindset. So if the oil wants to continue moving up, I am not interested. If it doesn't pull back, I'm not interested. The oil must pull back to this area. Not that it must. I want to see it to pull back here. Then when the buyers come back, I execute. As long as this level is holding, I'm still bullish. Entry at $82, anywhere in between this zone, between 82 to 77, anywhere between this zone, the price pullbacks to, and I see my buyers coming. I will join them. Stop loss will be at this level. My TP1 will be here at $90. Then my TP2, I can see that the market is going back to this 100% retracement. My TP2 will be here at, I think it's up to $120 per barrel. I think it's up to $120 per barrel. The height it got to before, that is around 120. My TP2 will be here. Once I take this oil trade now, I'm going to hold the TP2 for long. My TP2 will be at $120 per barrel, while my TP1 will be here. Once my TP1 gets to $90 per barrel, $91 per barrel, I will exit my TP1, move my stop loss to break even for my TP2, and allow my TP2 to run down to $120 per barrel, because I've seen that these guys wants to take the oil back to the height where it has gotten to before. So guys, I know this video has been very long. This is an hour plus, but please bear with me. I have to take my time to explain this to you. So let's just do a quick recap of what we are expecting to do. So for the BTC USD, we want to sell the BTC USD from this level. We want the price to rise to this level between 78,802. Anywhere in this zone, we'll see our sell entry. We'll sell. Stop loss at 83,532. TP1 at this area 62,803. Then TP2 will be here at 50,000 per coin. But we said that there's a sell entry, there's a buy entry that I want to take advantage of. So if you get a buy entry around this area, you can, if you get a buy entry around this area, you can take advantage of this buy entry while waiting for the sell entry. Price push back, push up, pull back, then you see the buyers coming, you join them, take the market to this resistance. Then from there, you can exit your buy. Then when the sell comes in, you sell. Then for the Euro USD, price is already at our area of value. Some people might call it the point of interest. We're waiting for price to push back, up. The sellers come back. If they cannot push, they cannot break below this demand area, and the buyers come in, this is where we join them. Entry around this area, let's say around this area 1.16140. Stop loss here 1.15392 TP1 before this turn, the EMA 1.17955. TP2 at this level 1.20801. So the next one is the gold. So for the gold, we want the price to drop down to this area. Price drop down to this support area. Take out all these early buyers here. Drops here. Wait for our buy signal to come in. Then here we want to buy the gold. When the price come down here and the buyers come back in, entry around this point 4897. Stop loss 4780. TP1 will be at this resistance area. Watch out for the resistance, a dangerous one, at 552.34. Then TP2 at 55.54. Let's move to the next one. The Nasdaq will wait for price to rise to this area at 25.379. Stop loss at 25.561. can take your TP1 at this zone here, 24,405. Then TP2 can come here, 23,824. Then for the US oil, wait for the price to pull back to support area between 82.202 to 77.063. Entry here, after the 4-hour candle close that you want to enter from. Stop loss can be below here, 76,652. TP1 at 91.248. Then TP2 at the 100% retracement, $120 per barrel. That is the height. We don't know if this oil may eventually create a new high, but we know that at least it will give us a equal high. So if it didn't create a higher high, it will give us an equal high. So guys, thank you so much. Appreciate your time. Sorry that this video is very lengthy. Guys, please subscribe, hit the like button, drop me a comment. Till I see you the next week for the next analysis. Have a good trading day, guys. Be careful. Wait for confirmation. Wait for price to come to your location. Wait for confirmation before execution. Be patient. This market is very dangerous. Thank you so much. Until I see you the next time. Safe trading.